Welcome back to The Explainer. Okay, today we are looking at a massive, literally game-changing move that's sending shockwaves right through the financial landscape. Kraken is basically taking three completely different pieces of the financial world, traditional stocks, crypto, and tokenized stocks, and throwing them all into a single blender. Let's dig into the numbers and see exactly what this looks like.
Let's start with the biggest number first, 7,000 plus. That's the approximate amount of U.S. equities Kraken says it's bringing to eligible EEA or European Economic Area customers through its new stock trading service. Just think about what that actually means for a second. A European investor doesn't necessarily need to use one platform for their crypto portfolio and a totally separate platform to trade U.S. equities anymore. Kraken is attempting to bring both of those massive markets into the exact same financial environment.
Now, to put that in perspective, contrast that traditional stock number with this one, 600 plus. That is the number of crypto assets Kraken already offers. So on one side, you got over 7,000 traditional US equities, and on the other, you have this massive crypto ecosystem with over 600 digital assets. But Kraken didn't stop there. And honestly, this is where the dynamic really shifts. They've introduced a third category that perfectly bridges the gap. 700 plus tokenized equities, which are known as xStocks. This isn't just a crypto exchange slapping a generic stock button on their app. No. This is the actual integration of traditional markets with blockchain technology, creating a totally new category of assets sitting right alongside the other two.
Section 1. Understanding xStocks, a mechanical innovation. Okay, let's dive into the mechanics here, because understanding what an xStock actually is, and maybe more importantly what it isn't, is absolutely crucial to grasping this entire rollout. So, by definition, an xStock is a blockchain-based token designed to provide exposure to the economics of a corresponding stock. If you buy a traditional stock, you're buying a conventional security through standard brokerage infrastructure. An xStock is completely different. It's a completely alternative way of representing and accessing financial exposure using tokenization. You aren't just putting a stock symbol on a blockchain, you're creating a digital token that mirrors the economic performance of that underlying asset. It's a fascinating concept.
Which brings us to Section 2, the one-to-one catch, not identical ownership. Kraken states that these xStocks are backed one-to-one by corresponding underlying shares. Now that sounds incredibly straightforward, right? It sounds almost identical to traditional ownership. But here is the reality check. One-to-one backed is absolutely not the same thing as identical legal ownership. If we compare the two setups, the differences become really clear. With direct stock ownership, you are a direct shareholder of the underlying company. You have voting rights, you receive a traditional stock certificate, or a direct digital equivalent. But with an xStock, you hold a blockchain token. Yes, you absolutely get the economic exposure to how that stock performs, but Kraken's disclosures make it very, very clear. You do not get the same shareholder rights. You don't get direct voting rights. The backing relates to the underlying assets supporting the token, but the legal and economic structure is fundamentally different. And believe me, that distinction matters immensely.
Moving on to Section 3, Convergence of Finance, a bigger financial trend. Let's zoom out for a second. You might be wondering, why should anyone outside of Europe even care about this specific rollout? Well, because this is part of a much, much bigger shift happening across the entire financial landscape.
Historically, we had these old world categories. You had your bank, your broker, your stock exchange, your crypto exchange, your payment platform. They were completely separate businesses, right? Different accounts, different interfaces, entirely different settlement systems. But technology is increasingly pushing all of these historically separate functions together into a single, unified environment. And Kraken is clearly positioning itself right inside that convergence.
And as these worlds collide, we're seeing the philosophies of one world bleed directly into the other. For instance, Kraken says U.S. stocks and ETFs are available for trading 24 hours a day, 5 days a week through its platform. Crypto markets, as we all know, are famous for operating around the clock. Traditional stock markets are definitely not. So Kraken is effectively bringing that always-on crypto infrastructure and philosophy into the world of traditional equities. But we do need to make a really careful distinction here. 24/5 is not the same as 24/7. It's a huge step toward constant availability, sure, but availability still depends on the specific asset, the jurisdiction, and the platform's rules. Which leads us to this larger strategic question. If crypto platforms are adding traditional securities and traditional brokers are starting to offer crypto, what exactly separates a crypto exchange from a modern brokerage anymore? That is the bigger strategic battle happening right now, and Kraken is moving directly into traditional brokerage territory.
Section 4. Risks and Regulation. New Layers of Danger. Okay, we need to ground the hype here for a minute, because blending these massively different financial worlds brings strict rules and entirely new threats.
Kraken can't simply launch stock trading anywhere it wants. Traditional securities are heavily regulated. For this EEA rollout, Kraken actually utilizes its European investment firm structure operating under the MiFID II regulatory framework. This proves that this isn't just some wild crypto experiment, it's a highly calculated move into a strictly regulated securities environment. And as we know, financial regulation generally moves much more carefully than the technology does, which is going to be a major factor in how quickly tokenized assets can actually expand.
And let's be explicitly clear about something. More products do not automatically mean less risk. With traditional stocks, you already have market risk. But when you blend in tokenization, new vulnerabilities emerge. You've got platform risk, custody risk, regulatory risk, liquidity risk. It's a whole new alphabet soup of things that can go wrong. So when you hear one-to-one backed, you absolutely should not conclude that it means risk-free. The jurisdiction matters. The structure matters.
Which leads us to our final part, Section 5, Ultimate Account, the unified ecosystem. This is really a massive bet on consumer behavior.
Kraken obviously started with cryptocurrency. But by pulling together 7,000 stocks, 600 crypto assets, and 700 tokenized xStocks, they're making a much broader financial platform play. They're gambling that future investors won't want siloed accounts. They won't want to say, okay, here's my crypto account and way over here is my stock account. Kraken is betting that investors just want to open one single app and say, this is my investment account. The whole shebang sits right inside it.
When you look at the sheer scale of the convergence happening inside that unified ecosystem, you have a massive chunk of traditional U.S. equities making up the bulk of the offerings, completely integrated with the slices of xStocks and crypto assets. The question isn't whether stocks and crypto are becoming connected anymore, they literally already are.
So the biggest challenge moving forward might not even be technological. It might actually be convincing investors that this unified model is simple, safe, and trustworthy enough to use. As the line between crypto exchanges and traditional investment platforms completely disappears, the next generation of investing won't ask, should I buy stocks or crypto? Instead, they're going to be asking themselves, where do I want all of my assets to live? And Kraken is betting everything that the answer will be on one platform. Thanks for joining me on this explainer, and I'll catch you on the next one.